Hey everybody, good afternoon. Welcome to 12-minute trading. Today's Monday, the 24th of March. We have a little bit of green in the market, which is a little bit of a change that we've seen for the last few weeks. So I am joined today by Dave of 12-minute trading as well too. And man, we've been talking about this for the past couple of weeks that, okay, let's get this correction out of the way, and then we're going to see relief rally. We're going to see window
Yeah.
dressing into the end of the quarter, and it's almost like it listened to us.
Right on cue.
Yeah.
Yeah. But we've had these, right? We've had days like this where tomorrow it turns around and gives it all back. So
Yep.
I think how today closes will be important, right? Does it close at around where we're at, kind of maybe not the highs of the day, but at least in a really good place like this? And then do we? Are we going to see this every day this week? I don't know. I'd love to see this initial shot like this and then us just grind higher, through the rest of the week. I think that would be really, really good for the markets. It would going slower higher would be better than trying to go really fast higher because what you'll have happen, we're seeing it now, is the daily energy is leading this. So the daily energy is releasing, and it's, obviously with a big move like this, it gives up a bunch. It's already down in the 50s, the low 50s, about to be in the 40s. So like you get like 2 days back to back, all of a sudden that energy's gone, and then all of a sudden you drop back down. So I'd rather see that energy burned out throughout the week and just kind of grind and stair step up from here. That would be, I think, really healthy. And I know you've been watching the 200 day a lot as
Yeah.
a really key thing here too.
Yeah, Dave, I I hate to tell you this, but whatever you want, the market's
Ain't
going to
gonna
do the
happen.
exact opposite of that.
Exactly.
That's what I've always found.
Yeah, that's how markets work.
Yeah. I'm going to go to just a straight daily chart here just for a second because I want to show you guys what I'm seeing in terms of here's the first obstacle that the market's got to get over. So if you draw the fibs on the SPX from the very top to the bottom of this swing, this 10 point whatever percent swing, this green line's a 200-day moving average. This is institutionally followed. So what people are doing is those that bought down in this area are looking for a specific known quantity where they can take profits. And they're doing that. And in fact, they're doing that right now because obviously we're down
Mhm.
from the highs of the day. Also, it's coming into confluence with this line here, which is the 38.2% retracement of that move. So this is a very common place to see for the markets to come up to this level, perhaps consolidate up here, and then we'll see if we can, it's like climbing a ladder, right? See if we can get through each of these floors. Now, the point of no return is at 5,900. If the price is able to get above and beyond 5,900 on the cash index, then we're probably going to be at least retesting the highs, if not exceeding the highs here in the next month or so. But we'll see. We're going to take this one step at a time. It's not uncommon for the price to, after a big sell off like this, for the price to rebound and go through a little bit of disbelief, like nobody can believe that this is
Mhm.
rallying. And then, that either marks the highs and it reacts back down and undercuts the lows, or it keeps on going. So at this point, based on kind of our theories of maybe window dressing into the end of this week, I'd be surprised if we didn't see a little bit more than today's move into the end of this week.
Yeah, I wouldn't either. I mean, I think if we can hold in this range, I think 5,800 on the SPX is a target. Maybe that's where you butt up against, and that's your next level to kind of hang. Today's move a little bit off of news, right? We had some tariff news come out that looks like they may be softening how they're going to do this on April 2nd, market like that. And we said, look, any good news on tariffs helps spur this. We do have the window dressing in the quarter. Those things are happening. So we're getting kind of that initial move, from that. But again, to see things get back into a normal, like quiet and trending market, there's a lot that has to be done yet before we get there. We are back inside of, and you can pull it up if you want to pull up like the Bollinger Bands and Mike's typical setup. We are back inside the weekly Bollinger Band, right? So we're outside the weekly. Typically, you're going to snap back in. That's very normal, right? So not surprising there. And yeah, so you can see we're back inside. And so just barely. we're making our way back in. But we can also see that the weekly energy is starting to turn around and head back the other way. Now, in the end, right, over the next month, this could actually just turn into one big sideways range, right? Where we've got, we basically take that long to get back up to 6,100 and change, and that would be, very, very good to charge up the weekly chart again. And so then we'd be ready to run again. And that may spur a good rally higher, maybe even new highs. So you can also see the daily chart, on the screen. You can see where we've got it. It's started to now burn out that energy on today's move. Look at that kind of V spike down that we're seeing already, taking down that energy. And so that's why I'm saying, like, this could be over really quick, right? But I'd rather see that energy take some time to burn out through the rest of the week, and then you'll see that weekly, as it's starting to turn around there, start to hook upwards on the energy, and the kind of the higher we go. But it takes some time. There's a lot of people out there that mentally are still damaged from this move, and then you always see that. So, but there'll be a catalyst at some point that gets it really going. And again, we talk about the four phases of the market, right? Disgust, which we just were in.
Yeah, we just finished discussed this. This would actually be the beginning of disbelief. If with a rally like today, I think a lot of people are like shocked. All the bears, which waited too long to get short with this rally, are all of a sudden way underwater right now and going through a lot of pain. The type of price movement,
Yeah, so it's disgust, disbelief. The market rallies in disbelief. Nobody thinks it should, and it does. And then it sustains that rally, and that gets you into acceptance. And then after acceptance, you get into euphoria, where you get that, parabolic tail and stuff that happens, right? So what'll fuel this, if it can't continue, there's a lot of people short, and if they have to start covering, that's just going to fuel it even more, right? So early for that. But that's what could drive this thing up eventually, maybe to new highs again. So so we're just really at an inflection point. We just, I would say, don't know yet. I think in the short term, like this week, we get some positive movement, but we get to April 2nd next week. We'll see what happens, and then get through that, and then we'll see if we get a decent maybe more quiet and trending upward market like we're more used to seeing. That's where we spend most of our time. Seasonality, if you follow it, would dictate that. And that February, mid-February through mid-March timeframe is usually a swoon, not as big as what we just saw, but it's usually not a great time for positivity on the markets. But after that, you start to get some gains into April and into May, and the old adage, right? Sell in May and go away, and that typically happens. And then you kind of bottom out mid-June-ish or so, and then you get that rally that goes through the summer, and then you get to September where it gets all volatile again, and then fourth quarter you typically have a good quarter. That's a typical year, right? And we may just be in for that. It just, I think the speed and ferocity of which this 10% correction happened is what's got people acting like it's a bear market when it's, I mean, after 2 years of 20+% up, that's not that big of a deal. So
yeah, pretty good confluence area here of this 38.2 and the 200-day moving average, which is in green. So that's not surprising. So if it's able to close above there, though, that's going to be huge, because that really sets the table for the price to come up into perhaps as far as 5,900, which would be the 61.8%. And that is the level of no return really for the bears, because if it's able to get above and beyond 61.8, which is in this case on the cash index, 5,900, that is where things could run if it gets above there. And we would, I think, very quickly be testing the highs. Now, you and I had talked about a potential scenario that this thing really sets up like the final move. Like we end up with, if I go back to like the weekly chart here, we did something like this. Like, I mean, you gotta understand, if you look at the context of this thing, this has been going on since 2009, and we've been going through one, two. There's actually three cyclical bear markets involved in this. And this could be the end of the secular bull. And the way that that would look is if we did something like this, and then it's just unsustainable up there. And then we start doing something like that, which would be so that would be whatever the market will do to create the greatest amount of pain to the largest cross section of traders is what's going to happen through the rest of this year.
Well, you and I were looking at just parallels of similar times, right? And we were looking at even the beginning of like Reagan and, kind of how the market acted even with him. And you were even talking about how initial, big positive move off the results of the election, then, started to falter around this time. And then ultimately, we went through that recession that we had then. And that, markets, weren't great. Different times now, but it is interesting to kind of see the parallels a little bit.
Well, here's the election in November of 1980, and so you can see how the market figures these things out a long time in advance. The market figured out that Reagan was going to win, and liked his policies and was very optimistic about what he could do. But then Reagan gets in, and then things started to go down because it's like, hey, we have to make some tough choices here. And so we basically got, if you look at this, it's like all of 81 and most of 82, about a year and a half, which is your typical standard bear market. And I haven't done the math to see what the tip to tail on this one is, but right after that, growth kicked in.
Well, interesting enough, if you look at where the market dropped, and right in the beginning of the year, it was the same type of thing, and then it rallied into April of that year in 81 in May, and then that's when it started to lose things as it got into July, and then really fell apart.
Yeah, it fell apart in August. The beginning of August is where it really got ugly. And then, coincidentally, exactly a year later, this is when it bottomed from here. Mm. So I'm going to do some quick numbers here. I'm going to see how deep this bear was. Look at that. The S&P being 141 points.
Big difference between today and then.
Yeah, that's what
percentages are.
That's what printing quantitative easing will do. So we went from 142 down to say 102. So 40-point change from 142. That is 28%, believe it or not. So that is a pretty healthy standard bear market that we went through, and it began right around the election. And that's just some of these, there's probably a lot of analogies. There's probably a lot of parallels. We've got to break the system before we can fix it. At least that's the thinking right now. Because, I think everybody agrees that we cannot continue doing $2 trillion deficits, every year.
Well, we've talked to that a lot on this, on these meetings, ad nauseum, right? So, people probably don't want to hear me go into that again. But that's gonna stop. And and I've said it's that balancing act, right? And I don't envy them. That balancing act of how you spur the economy, cut the size of government, cut the spending of government, and it's kind of that constant balancing act down. So we'll see how it goes. We'll see how it ends up for them. But I think we should be prepared for that swoon recession that you may have to go through to get out of that. And the other side of that's really good. If honestly, if you think about it, if you get like a balanced budget that is literally you're not spending more than you make, you maybe are taking in more, and you're able to be able to pay down the debt. That'd be amazing. But if they get to a place like that a year from now or so, I think things go really, really well, especially if they lower taxes and do the things they're talking about. But again, not easy.
But what did we learn from this recession, or not recession, but what did we learn from this correction? That we came off of the all-time new high. An all-time new high, which was on the 19th of February. and we were printing new highs, and there was
Yep.
no reason. So a lot of, there's a lot of technicians that'll say, oh, well, the volume divergence was out
Right.
there, and you should have known. Nobody knows, and I think that's one of the things to point out from this one is that this came right off the all-time highs, just like 22 did. So what this tells us is that even if we rally into new highs, we are going to have to take this one day at a time. We're not going to get fat, dumb, and happy. We're not going to get complacent if we print new highs. We're not going to assume anything. And we're
No,
going
we
to be
can't.
ready.
We can't. I think it's lurking out there at some point. And again, history would show that you're going to have to kind of go through some tough times to right a ship. I mean, that's just the way that it is. Whether it's in your own household, if you've got to cut back on spending and do the things you got to do, or a big behemoth like the United States, there's kind of that period you gotta pay the piper and go through some of that pain. So again, we'll see how well it can be mitigated, but that would be something that I plan for as a trader, as an investor. That's what I would do. Is just be ready for it, right? Know where, like make sure your stops are in, know where where your kind of drop dead levels are, where you just I'm out and done. If that comes back, but don't be surprised to see the market fake you out and try to go to new highs again before it does that. Again, disgust, disbelief, acceptance, euphoria. If we're getting into disbelief, next is acceptance, and then you get euphoria again, right? So just be ready for that.
Hey guys, let us know if there's any questions that you have, any topics that you want us to bring up, or anything like that. Typically, around this time of the session, I get asked to look at Bitcoin. I'm going to do that.
Yeah, I
real
was going to
quick
tell you
here.
to do that because Bitcoin's had a nice little bounce over the weekend here.
So what I'm seeing with this is actually, I would consider this a change in polarity as well too. So we've been making lower highs and lower lows, and when you come off of a consolidation, especially one where we did print an intermediate low here and then come into a new high, I'm counting this as a change in polarity back up to a daily uptrend. Now, this is not going to be easy to get through this descending trend line. So this descending trend line is going to be difficult to get through. If we draw the fibs on this one, which I have not done yet today, so let's try that. We're going to go from the all-time high down to the low of this correction. And look at that. We're right up to the same exact place. So 38.2 trend line. We are above the 200-day moving average. That's the only thing that's different here. But there's also a confluence. Now there's the 50-day moving average. Now what's interesting here is that we're about to hit a death cross. We're about to hit a death cross, and a lot of people, there's a lot of ink spilled on death crosses. But look at the last one that we had. Here's a death cross, which was back in August of 24. It corrected. It reversed back by the time we got to October 24. The last death cross before that was the same thing in September of 23. It uncrossed back here in October 23 and just ripped everybody's face off. So I wouldn't put too much weight into the death cross, the golden cross and death cross kind of thing. So keep that in mind. Just be aware that there's going to be a lot of ink about a potential death cross if this is able to, if we don't immediately break higher from here. Now again,
while you're on this, pull up XRP too, because I know Ripple, the SEC dropped all their suits against them and stuff. So
yeah, there was a reaction the other day, last week on that, and then it's since that point it's just kind of this is, if you pull out to a weekly chart, this is just a big consolidation. So there was the big breakout, and that was a huge range. That was an enormous base that this has come out of, which went all the way. I mean, if you zoom way back on this, this is a big rounded base that goes all the way back to 2018. So it's not surprising that we're seeing a little bit of a handle. This is a big cup with handle pattern, if you will. So I would expect to see a lot of noise, a lot of chop in this area. But the measured move target from here is going to be about probably somewhere around like $7 or $8. So for those of you that are buying Ripple here at 40 cents, I mean, you're gonna make out quite well on something like that. The one that really kind of scares me is Ethereum. Ethereum looks terrible right now. And I don't know if it's because you got things like Solana, which are
Mm-hmm.
overtaking it as a potential platform. But Solana, the problem with Solana is like everything that Solana is written on top of is just a garbage meme coin. So people aren't taking them seriously. But still, I spend 99% of my time just watching the big dog here.
Mm-hmm.
So if the thing you got to understand with Bitcoin is right now, this is a monthly. So if you look at this, this is a monthly uptrend, and then this is a pullback. Let me get the fibs off of there because sometimes it makes it. Remove the fibs. Okay, so this is a monthly pullback. It's allowed to do that. To have a reversal into a bear, you would need a monthly lower high to set up and then a subsequent lower low. Similar to what happened right there. So we pulled back, set up a lower high, confirmed it, it was done, it was toast by this point. And that's coincidentally exactly the same time that the equities market was getting destroyed. So we are still owed some type of relief rally in here on Bitcoin, and then we're going to see whether or not this has the ability to go above 100,000 and stay there this time. Okay, any other questions from anybody? So back
Take a
to
look
there.
at, we talked a little bit about it. Take a look at, pull up gold, look at GLD. It continues to have some, uh, I like the chart, actually the best of all the charts right now. It is in a quiet and trending uptrend. It's consistent. When it gets exhausted on its energies, it, pulls back some, but nothing huge. In fact, it's in that process right now. I've been doing a lot of my short-term trades on GLD lately, just because it's a much easier chart to pattern right now. Um, and you can see it got exhausted on the daily, so it's kind of walking in a range there on the daily chart. The weekly's kind of been in exhaustion for a little while, and it's still pushed higher some, but it's kind of been hanging in this 265, 270 range, 275 and to 280 at the most. I mean, on GLD, but it just kind of waffles between 275, 280. So like, I love selling iron condors on it short term, but of all the charts, Doc, you give your opinion. I think this is just a quiet and trending, chart right now, and it's one of the few that are out there.
If you guys ever want to know what a cup with handle pattern is supposed to look like,
Mm-hmm.
here
There
it
it
is.
is.
Here it is right there. I mean, if you want to go to a dictionary, look for cup with handle, this is it. And in fact, if you look at this, this is actually a cup with handle, and then just for fun, it also included an inverted head and shoulders pattern on here inside the handle just to add a little bit of spice to things. But if you want to know what the measured move target is, you just look at the depth of the base, and guess what? It's there. We've hit the target. So this is where I would, if you're long on gold, I do agree with Dave that the chart looks great, but don't let this one get away from you. Make sure that you're hedging your downside on this one, because we've got
that's why I said I've been playing it short term. I don't know about long term to the downside. I'm sure it'll correct at some point. There's been a lot of things happening with gold over the last year, but a lot of repatriation of gold back to the U.S. too, into the vaults and stuff. So that's a bigger game that I can't really comment or speculate on, but there's reasonings behind that. But gold, if people are preparing for what could potentially be like a recession or something like that, or more turbulent times, then that kind of explains why gold, silver, and stuff have been doing what they've been doing.
I'm going to check the GC and make sure we're getting yeah, we are getting the same thing on the GC. Sometimes the GLD has got a little bit of distortion, but the GC is really the same chart. And
Hmm.
silver really is just kind of falling behind. It's just not really there. So I've owned the SLV for years, and it's just not getting anywhere. I mean, it's doubled, but it's taken a long time to double, and so it's not really an inflation hedge right now. Let's see. Alan is saying, did you mean to show the death cross on BTC USD instead of S&P? No, I specifically meant to bring up the death cross on Bitcoin because we don't have a death cross on the S&P right now.
Yeah, we're not there yet.
Let's check that. Yeah, we're not there. It's coming, but it would take. So first of all, for us to get a death cross on the S&P, if we just sort of extrapolate things out, it would be like this. It would have to be like this, and what we'd have to see from the price would have to continue failing for this to set up and to bring down that 50 and start bringing down the 200. But I'd say we're probably at least a month or 2 months away from any kind of potential death cross on the S&P. So I'm mostly bringing up the S&P or the death cross on the Bitcoin because what you find is the analysis on crypto is generally what I find the analysis on crypto is like so elementary that's out there. It's like guys that just found charting and they just found stochastics and they just found the RSI and moving averages and they just found out about this thing called a death cross. And it's like as soon as you get near one of those, all of a sudden you see headlines like death cross on Bitcoin. Whereas you see this on the S&P or any of the other, and people are like, that's, you know, I mean, we get one real signal every once in a while that actually means something. But I think most traders have figured out by now that the death cross and the golden cross are just kind of meaningless signals. They're only good in reverse to say, well, I guess
Hmm.
there it was, you know, because for every good signal that you have, you probably have at least 6 to 8 bad ones that end up getting reversed as the price reverts back to the mean. So sorry, Alan. Yeah, I meant to. It was meant to be on Bitcoin.
Yeah, I mean, there's not really much else that I've been seeing lately other than what we talked about in the beginning. I think there's this I think after several weeks 4 weeks of selling and all the stuff that we had, it's natural to see a good bounce here. And see it this week be a positive week. But again, if you look at that in context of a weekly chart, one positive week in the midst of a bunch of negative weeks is just that, right? You get your positive week. So, you're not out of the woods on anything yet. I think your point about 5,900 is key. That's the level to watch. Can it get to it? Number one, can it get above it and hold it? Number two, and then what happens even when it does at that point? But that's the thing to watch for. And again, who knows? Today could be one of those one day wonders that we're seeing in the market, and we sell right back off tomorrow and right back in this pattern that we've been in again, right? Some
Well,
headline comes out, whatever it is,
well,
could do that.
what you got to do is you got to study how the price reacted in the past. I mean, we dropped 12% back here to at the very beginning of 2022, and we immediately rallied up to the 61.8% retracement just a couple weeks later. And then what happened there? We flushed again. We undercut. And then what happened? We rallied like crazy, even above the 61.8. We made a new high here, a new relative high. And it was right then that Jerome Powell said, he said, I'm not going to play. I'm going to start raising rates, and I'm going to
Yep.
keep raising rates. And, to hell with your puts and your calls and stuff like that. So, but that turned out to be, we always talk about initially we started out initially by turning into a downtrend on the daily chart, and then it transitioned into a downtrend on the weekly chart on this bounce, and then subsequent lower low. And then this was a transition to the monthly chart. This is where I think it took a lot of traders underwater because they see this new high and they see this move above the 61.8, and there's all kinds of reasons to have optimism at this point. And this flush took them out. This was really bad. So this is why Dave and I are like, hey, look, we're going to get rallies. But at the same time, the overlying backdrop right now is not negative. It's not a negative growth story. It's a, hey, the system is broken and we're going to continue to break it story, because that's the only way to fix this thing long term. So what we're not necessarily warning but protecting, or encouraging guys to understand is how these things move, and so you can stay protected.
Some of the sharpest rallies come in corrective markets
Absolutely.
and bear markets. And so you're going to get those. The way that I smooth this out, guys, and it works pretty well because you've got higher IV, is I go a little bit. I typically do I do iron condors at different intervals, but my typical monthly ones, I just make those about 40 days or so, 45 days at the max, and that gets me really good wings, if you will, to widen those things out and kind of let that thing do its chop in the middle and all that stuff. I've got plenty of room to either side for 10% up or down, typically, with those iron condors like on the SPX. And you just gotta let time work on those, but it definitely smooths out the noise, makes it a lot easier. I shifted to that, about the second week into this mess, and those trades have been doing really, really well. So, and I'm typically targeting a, 5 to 8 delta on either side with those things if I can get it. I'm trying to get about a 4 to 6% return on risk, in the span of a couple weeks, because that's usually how long I'm in those things. And those have been working good. And that's kind of how you got to smooth it out. Now, once we get back to, like a quiet and trending again, those still work, but I can go back to the shorter time frame and, get a little bit, more aggressive with how I do, things in trade those. But right now, a little bit more time, wider wings, is working pretty well. So something to think about if you're trying to just smooth out the noise of this market.
Yeah, absolutely. Well, we seem to be we're getting a little bit of a kick here.
Yeah, it looks like
A
it.
little bit of
Looks
a
like we're
kick
going to the highs
as
of the
we get
day here.
into. We got a little less than an hour to go, and so far we're trading still above the anchored VWAP, which is this pink line here.
Yeah.
The other thing to notice too, though, is just by the number of candles that I'm seeing here, these are tick charts, and tick charts are volume sensitive. Not seeing a whole lot of activity today. So a lot of this has just been just like how we dropped on relatively low volume because it was a buyer strike. Nobody was arguing. They just let the sellers take advantage of this. And right now, what we're seeing is the sellers are like, okay, we're going to let you have this, but we're going to be back. Right? So it's like an implied warning. So it's a very low volume day. This is a little bit of short covering. There's not a whole lot of buying going on here. It's just any buying is generally been short covering. So we'll see, but it looks good for us to close near the highs of the day and get above. This is a really key resistive level here to get above that fib retracement and the 200-day moving average to recapture. This is almost like playing capture the flag. To get that 200-day moving average is huge, and that does. If we're able to do that, that does point 5,900 in the short term. Maybe by the end of the week, these things will happen very, very quickly. Okay, no questions. Anything? We're way past our time here. So,
we're good.
yeah, so
we went over a little bit today, but I think this was good. We went through a lot, so good on it. Good on a replay for people too. So thanks for tuning in, everybody. Thanks for watching, and we'll see you here next week. We'll see how this plays out. But for the time being, got ourselves a nice little rally going. So we'll keep it up.
all right, guys. Thanks, and see you next week. Bye now.
Bye, guys.